All right, let's dive right in. Today, we are breaking down the latest earnings report from the consulting giant Korn Ferry. They just dropped their Q2 numbers, and the market reaction was pretty strong. So, we're going to get into exactly what happened and what's driving all this optimism. So, how did the market react? Well, it absolutely loved it. The stock jumped a solid 4% on the day they announced. And this wasn't just some quiet little move, it happened on almost double the average trading volume. That's a huge signal of investor confidence in what they're seeing. So, why all the excitement? What was in that report that got everyone so bullish? Let's dissect the numbers and see what's really behind that pop. And here you have it. Korn Ferry delivered a really clean beat on both the top and the bottom line. You can see their adjusted earnings per share came in at $1.33, a nice 3 cents ahead of what analysts were expecting. And check out that revenue number, almost $730 million, which just blew past consensus by nearly $25 million. That kind of beat across the board really set a positive tone for the whole story. Now, this is where it gets really interesting. Where did that growth actually come from? Well, their core people businesses were just on fire. Professional search and interim shot up 17%, and their flagship executive search business grew a really strong 10%. That's its sixth quarter of growth in a row. Now, you might see that 2% dip in digital and think that's a red flag. But listen to this. Management was very clear that this was an intentional, purposeful pivot as they restructure that whole part of the business. Okay, now this number right here, this is a big one. This is what you really need to pay attention to. They are sitting on a massive $1.84 billion backlog of work that's already under contract. And get this, it's up 20% from last year. For a company like this, having that much future revenue already locked in is a huge advantage. It gives them incredible visibility, and it's a big reason why investors are starting to feel a lot more comfortable with this story. But numbers only tell you part of the story, right? The real thesis here, the long-term play, is all built around the strategic narrative that management is pushing, a story about integration, technology, and becoming one single partner for all their clients' talent needs. And this quote from the CEO, Gary Burness, pretty much sums it all up. He kept hammering this point home on the call. We are Korn Ferry. The whole idea is to get everyone, both inside and outside the company, to stop thinking about them as 5 separate businesses. Instead, they're one integrated firm that provides holistic solutions. This is absolutely crucial for them to land those bigger, more strategic deals with large companies. And look, this isn't just some corporate buzzword. Here's the hard data to back it up. The money they make from cross-solution referrals, that's where one part of the business brings in another, is now almost 28% of their total revenue. That is up a whopping 250 basis points from last year. So the strategy is clearly working, and you can measure it. Management's goal? To push this number up toward 35%. So, what's powering all this integration? It's technology. They just rolled out their new talent suite. You can think of this as the digital backbone for the entire company. It's an AI-powered platform that brings together all of their unique data and intellectual property on things like assessments, pay, and recruiting. This is the engine that's going to drive their future growth and cross-selling. Okay, so that's the quarter that was strong results, compelling strategy. Let's shift gears now and look forward. What's the guidance for next quarter, and what were the big topics that came up on the analyst Q&A call? First off, the guidance for Q3 was solid. And maybe more importantly, no nasty surprises. They are expecting a slight seasonal dip in revenue, which is totally normal for the holiday quarter. But the really impressive part, look at those margins. They expect them to hold stable year over year at over 17%. That tells you they are running a very tight ship. The earnings per share guidance of $1.22 was right in line with what the street expected, and the market loves to see that kind of predictability. The Q&A with analysts gave us a little more flavor. On AI, they're not scared of it. They see it as a tool that makes their consultants better, not something that's going to replace them. They also pointed to this huge trend they call Peak 65, basically the massive wave of baby boomer retirements, which is a major tailwind for their search business. They confirmed again that the digital pivot was intentional. And they did admit there's some softness in the Asia-Pacific region, so that's something to keep an eye on. All right, let's put it all together. We've looked at the quarter, we've looked at the outlook. Now it's time to synthesize all of this and give you our verdict. So if you're a bull on Korn Ferry, what do you need to be watching for? Here are the 4 key things that have to happen for the stock to keep climbing. First, they have to prove that the digital business is stabilizing after this overhaul. Second, we need to see real signs that clients are adopting the new talent suite. Third, that huge $1.8 billion backlog needs to keep growing.
And finally, they've got to maintain that impressive margin discipline.
So, taking everything into account, we're calling it our rating on Korn Ferry is outperform. That 20% year-over-year backlog growth gives them a serious cushion in a shaky economy. The whole We Are Korn Ferry strategy is delivering real, measurable results. And the fact that their guidance was stable and in line tells us management has a firm grip on the business.
Okay, so let's wrap this into a trade idea. The core thesis here is that the market is still looking at Korn Ferry like an old-school cyclical company. We think it's underappreciating how durable that massive backlog is and the long-term potential of the new AI-powered talent suite. So the play is pretty straightforward. Long the common stock. What's the catalyst? The next earnings report. If they can show that backlog is still growing and we see the first signs of a turnaround in digital, we think the whole narrative around the company could shift, leading to a higher valuation.
As always, please remember this is for informational purposes only. This is not financial advice, and you should always do your own research before making any investment decisions.
So I'll just leave you with this final thought to chew on. When you have a company with a backlog growing at 20% and a brand new AI platform hitting the market, is its current valuation, which is at a discount to the broader S&P 500, really justified? That's the billion-dollar question for the quarters ahead.